Hi, I'm Amy Cornell, and I am your Texas broker with Front Real Estate. And I wanted to talk today about lending and what the timeline looks like when you are working with a lender in order to kind of know what to expect and how the process goes. This can be helpful if you are a agent or if you're a consumer that's trying to just know more about what's happening with the lending timeline. So first off, when a consumer initially calls a lender, they're going to start with just a short interview over the phone, usually or sometimes they're an online application that will allow them to get a pre-qualification letter drawn up for you. That pre-qual, they are going to pull enough information to pull a credit report for you and any other borrowers on the loan, as well as getting enough income information so that they can pull an appropriate debt to income ratio and know what size of loan they could qualify you for. They'll often ask you how much you want to pre-qualify for. They're not going to necessarily just go and do the max, but talk to them about what that would look like. And then you can also at this point get a fee estimate that talks about what the projected interest rate might be. Again, they cannot lock that in until after you have a property under contract, but you can get that fee estimate to show what the interest rate might be, as well as what then the projected payment would be for that interest rate, and what the projected total cash to close would look like in that situation. So including down payment and your closing costs. It's a great tool to be able to kind of know where to start. So this is really where it all begins. If you are someone who is self-employed or a 1099 worker, I encourage you to go ahead and get fully pre-approved rather than just pre-qualified. And so that would look like getting all of your tax returns and bank statements, all the things that the lender needs for full pre-approval to them at this point, so that way then you can start your search fully pre-approved, ready to go. Otherwise, we're going to do that part during more of the processing part of the timeline. So pre-qual is very important. Let me get my mouse. And then the next one I have is actually going under contract. So during that, get pre-qualified, go look at houses, go under contract. When you go under contract, at that point, like I said, that's when you can lock the interest rate. So once you have that property under contract, the lender can lock your interest rate for you. I always encourage people to go ahead and lock their interest rate as soon as possible. A lot of people think, well, I might want to wait a couple of days. Maybe the market will improve, something like that. It's possible, and you can work with your lender about what their best advice would be. But know that most lenders, or all the lenders that we work with anyway, have float down provisions. So if the rate substantially improves, then you can float down to that rate. But there's not a protection if you don't lock in and rates go up. There's no protection to get you back down to what that rate was when you initially called them. So I think going ahead and locking in with that float down provision is a really strong way to protect yourself to make sure that you are ready to go forward. Once they lock that interest rate in, they will submit a ton of disclosures. So there'll be a lot of paperwork coming your way. It will either come out via email or it may come out in paper, but most of the time it's going to be emailed, and it's going to have all of the required disclosures that they're supposed to make governmentally. And then at that point, once the disclosures are out, then the lender can order the appraisal. In Texas, most of the time, I see lenders ordering the appraisal after the option period expires, which is that first part where the buyer is doing the inspection. I will tell you, I don't love that. I think going ahead and ordering the appraisal is really a good thing sooner in the process. The reason why that's a customary practice is the lender is trying to save the borrower money if they terminate during the option. Well, from my perspective as their agent, we didn't contract with this house for planning to terminate on it. We contracted on it planning to close. And so I want to go ahead and see that appraisal done as fast as possible, because I want to make sure if we have any issues, those are coming up as soon in the process as possible. And so that I don't have heartbroken clients, a week out from closing where we are dealing with a more major issue. So I think appraisal is really important to go ahead and get ordered as soon as possible. We are seeing just in our market about a 2-week turn time on those. So it's not something that goes super fast either. So going ahead and getting it done now versus waiting a week and then ordering can be great. All right, appraisal gets ordered. Also, don't be surprised if on that appraisal they ask the buyer to put up a $400, $500, something like that fee to cover that appraisal up front. All right, once the appraisal is in, then the file goes into processing. Keep in mind that up until this point, a lot of times the only person who has looked at this file is your loan officer. So the loan officer has been the one to pull all the initial documents, get all the disclosures done, do all of that. Then it will move over, once they complete that part, then they'll move over to the processor's desk, and the processor is going to do things like pull verification of rent, verification of employment, IRS tax transcripts, anything administrative that they need to have to finish up the file. They're also going to be looking through and seeing maybe the loan officer forgot to get a large deposit verification or something like that, and so they'll be reaching out to the borrower to get those as well. Here's my concern on this, is that when the only person that has seen the file is the loan officer, sometimes things can be forgotten. So from a consumer perspective, don't be surprised for the processor to reach out to you to get more information, and it can feel kind of late in the process, especially if we didn't order the appraisal until after the option period. It could likely be day 21 to maybe even 23 when the processor is actually getting the file if we delayed that appraisal. And so I want to do that again, just try to get everything going a little bit faster, because when you're getting requests from a processor on like day 21 or 23 and you have already boxed up your house and are ready to move, it can just be a little disconcerting that the process is not farther along for example, a 30-day close. Okay, just my soapbox on that. I will tell you the processors are the unsung heroes of this. They do so much for the loan to really help promote and get it through the process. It's a really important part of the process to have the processor. So know that they are really important, and then they package up the file for underwriting. So the underwriter is the granddaddy of them all. They are the ones that know all of the different nuances of the regulations for that individual lender and for the final investor that is purchasing that loan. So even though, let's say that it was closing with Verity Mortgage, which is more of a local mortgage company, they're going to have some requirements, but then on top of it, they may be planning on selling that loan to like SunTrust Mortgage, and SunTrust is going to have another layer of requirements on top of it. The underwriter is going to be able to look at all of those and make sure that this file is in compliance with that. Because they are granddaddy of them all, that's where the rubber meets the road. That is, until we get the answer out of underwriting, I don't ever breathe completely easy. So that is a big part, is the underwriter saying yes on the file. And so what we are looking for from them is this clear to close, or CTC order, saying, hey, everything is fine. Now, what I will prepare you for is it is totally normal for the underwriter to have other requirements that they put on the file that they kick back to the loan officer and the processor. So just know it could go from here back up to the loan officer part, back to the processor, then back to underwriting for more of a final underwriting. That process normally takes a couple of days. So again, that's why I want that us to have as much time before closing as possible to make sure that we're going to meet those deadlines. Once the clear to close is issued, then that is normally when the closing disclosure will go out. And keep in mind with the new HUD regulations is that the closing disclosure has to go out 3 days prior to closing so that the borrower has that to review, and they can, put it under their pillow and feel good about it. Like, oh my gosh, my lender is protecting me and telling me all these consumer disclosures. I don't love it. I don't know that it really actually helps. When this process came out, we thought, oh my gosh, the buyer is going to know exactly how much money they need. They're going to have everything buttoned up. What a cool thing. Well, not really. Part of it is with that CD, but then the title company is going to prepare the actual final CD. So just because the lender sent that one out 3 days in advance, still get the final number from the title company as far as what the borrower needs to prepare for the cashier's check or wire to closing. That should come from title. So we'll have the clear to close. Then it'll go to the closing or doc prep department within the lender to get the documents out to title. Once the title company gets all the documents, then they're able to prepare that final CD and get that number out to the borrower. So after documents go to title will be able, they might have already scheduled closing, but they will definitely be able to schedule closing at that point. They will have usually a separate appointment for the borrower and for the seller. Those will be separate. And then once both of those are done, the buyer has sent in the money, the lender has sent in the money. They send all the documents back to that closing and doc prep department for final funding. And then once they get funding authorization, then in the state of Texas anyway, it's deemed actually sold. So it is closed and funded. And then at that point, it's sold. And then whatever occupancy per the truck contract can happen. So if there was a seller temporary lease, or if it was at closing and funding, that at that point, that's when the occupancy transfers and the buyer can get keys. Then the buyer really does not have authorization to access the property or have keys before that. We've got to get all the way through this. So hopefully that makes sense. If you have any questions with anything or want to talk more about it, definitely any of our lender partners can talk with you, but I'm also happy to answer any questions. I will tell you, I learned a lot of this because I was a lender. Part of my career path was I was an agent. I did not understand what was happening on so many loans. And so I was able to have an opportunity to go into lending. I took that and did lending so that I could try to learn more of what was happening behind the black curtain of why these ratios were off or what they were looking for on this and that kind of thing. And it really did help me to know more of the process to be able to pass that on to you. So I hope that helps. Thanks.